Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 17th of October. I'm Daniel Lam, your host for the podcast. Most of the recent narrative has been on the US elections, as well as the Chinese stimulus. But do note that the economic expectations for both Germany and the Eurozone ticked up in the month of October and surprised positively for the first time since they dropped sharply this summer. Now, this is actually in line with last week's surprise improvement in the ticks. Now, the expectations measure usually leads the euro area manufacturing PMI, which has been trending down since May this year. So naturally, investors will be asking, is it time to turn more positive on euro area assets? Well, we've been underweight euro area equities, and we are continuing to do so. Yes, euro area equities, they do look attractive based on the valuation. However, the outlook for equities in the other regions seems to be more attractive, especially the ones in the US. The increasing probability of a Republican clean sweep is positive for US equities. That we discussed in good details in our podcast this Tuesday. The euro area economy is sensitive to the slowing global manufacturing cycle. Consumers are cautious, and its businesses face shrinking profit margins. Monetary policy remains restrictive in the euro area, despite the ECB being on an easing path. And unlike that in the US, fiscal constraints are likely to hamper any cyclical upswing across major European economies. The potential build-up on European political noise in the form of budget on the domestic front, and also globally if Trump were to be elected, may lead to potential downgrade on the euro area's growth outlook. So what is the best way for investors to be positioning here? Well, the euro dollar has been trending down, but the relative strength indicator, i.e. the RSI, has not been making new lows. That means the strength of the selling in euro versus US dollar is abating technically. So we prefer our opportunistic trade idea in buying euro area government bonds with FX hedged, as we expect the ECB to remain on the policy loosening track. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.